What are you looking at, Aaron? You looking at your call options?
No, not today. They're not really doing that well. I did buy some calls earlier today. Market ripped
Terrible.
high. Well, it ripped higher right when I bought the calls, and then I didn't sell them, and
Because
now
you
they're
got greedy. You got greedy, just like the AMC folks got greedy when it hit all the way to 73, $74, and they just always wanted more.
was that the all-time
Always.
high?
Yeah, so let's go ahead and take a look. I will go ahead and throw up my charts. By the way, we just did a cold opening, which I personally love. But my name is Zunaid. That's my man, Aaron Bree. We're going to go through and talk through some stocks. We're going to go ahead and obviously pay attention to AMC as those earnings come out after the close. And then we will go ahead and talk through some more chart stocks. And then we'll go ahead and be here for the earnings call. And then afterwards, we've got an awesome first time that we've done it this year sports betting show called The Backdoor Cover. It's with my man Jake. We're going to talk March Madness, NFL draft, NBA, you name it. He's got it. But to answer your question, Aaron, the all-time high on AMC, or, when the madness was happening, was they did the split.
Yeah.
Yeah. So I guess post-split, about $400, but I believe pre-split, chat, let me know if I'm wrong, was about $74.
I mean, yeah, this is one of those examples of what we saw with AMC and GameStop. I mean, that run up the entire thing was just like unprecedented at the time. We've seen some short squeezes since then. I mean, Carvana, it's gone from now $5 up to 80, and some other Bed Bath and Beyond comes to mind, BBBY, but nothing like this. I mean, AMC was maybe even more drastic of a squeeze than GameStop was.
Yeah, I mean, I never really got into GME because I always felt like, it's already ran. AMC is where I made solid bread and butter and like woke up at 12 o'clock not worrying about anything because I had beautiful income. Then tax time came and then I, had to pay Uncle Sam, which, by the way, boys and girls, if you're at home and you have great gains, please set aside some money for Uncle Sam. You definitely want to do that. Speaking of which, my man Crypto has been going crazy. You holding anything, or are you still a Doge person?
No, I did make some money on Doge on the first run up, but no, right now I'm not holding much crypto, Zunaid. I did hold some Ethereum, and I sold it about a week ago. So I sold it for a nice gain, but I mean, I would have made more had I held on to it. But definitely, you saw a lot of FOMO buying today. Bitcoin ran all the way up to basically all-time highs at 64,000. So it's intraday. Bitcoin has gotten up to 67,000 before its all-time high close is around 64,000. So I mean, you saw it get basically all the way up there, and then this big sell-off. There was a problem on Coinbase, and that might have impacted the price of Bitcoin, but I have a hard time believing there wouldn't have been a pullback even had that Coinbase thing not happen. So either way, you saw some FOMO buying today. You're seeing some people get flushed out at the very top, but I don't expect it. I'm not calling a top in this right now. There's no point in trying to call a top in Bitcoin or cryptos the way some of these things run. You just got to let them do its thing. And but as always, it's never going to go just straight up. You're always going to see little pullbacks like this. So we'll be watching Bitcoin, see if it can hold this $60,000 level.
We will find out. And obviously, when you had that Coinbase scare about, the numbers showing up wrong as if you just went flat broke and then you just had Coinbase take your money and go, then you had that nice little dip. But obviously, we have bounced back. Let's go ahead and, you've got AMC. So we're going to bounce around, chat. Again, if you're just joining us, welcome, Zunaid, Aaron. We're going to go through charts. We're going to talk stocks. We're going to talk AMC. We're going to talk about the earnings. Then we'll go ahead and hang out all the way through for the earnings call. And then we'll go ahead and rock and roll. So just a heads up on that. Let me see what we've got here. Sorry, give me a sec. Can I throw up? What do you think? Does AMC hit double digits this year?
What are we at now? $5?
Yeah.
I don't know. I mean, if we see another squeeze, maybe, or if they do another split.
It'd be funny if that's the only way that they actually made it up there. But let's go ahead and take a look. I mean, I'd be down to go ahead and own it here at 5. I wouldn't mind. I think we can go ahead and make a little bit of a run to maybe the $6 and then above. But yeah, it's not looking great for AMC, no matter which way you want to go ahead and spin it. Something crazy needs to happen for this one to keep on rocking to the upside. And maybe they'll say something crazy. Maybe they'll say AMC is now in the AI business.
That'd be good. I mean, if AMC can start putting out its own movies and it doesn't have to pay part of its ticket sales to the Hollywood studios and it can just make them real quick with AI, I'm sure that'd be great for the company. I doubt the movies will be good, or at least right now. I know the Sora thing looks really good on Twitter and stuff, but can it make
dude.
can it make a full length movie? No, probably not. I actually would be surprised if AMC have um does not have something about AI in its earnings report. I don't think it'll be, but it could just be something like, hey, we're using AI to track customer data. So if they know that you buy, tickets to these types of movies, maybe it makes their advertising a little bit more efficient, that it knows, okay, we need to target Zunaid with only rom-coms that come out, in the summertime. And that's when they spend their advertising dollars on Zunaid or whatever it is. But there are other ways that companies can use AI like that a lot of people aren't thinking about, that can, at the end of the day, really push some value and some efficiencies for the companies.
Well, one thing that's really cool, shout out to our producer, Aaron, producer Freehand, whoever put this up here, is AMC's fourth quarter results will include the results from Taylor Swift's The Eras Tour and Beyonce's concert film as well. Have you gone to a Taylor Swift concert? I don't know. Is that your style?
No, it is my style, but no, I did not go. Okay. I did not go to the Eras Tour or see the movie. But
I feel like we should buy calls. I feel like I'm gonna buy call. Chat, what do you think? Let me get a 1 in the chat if you think I should buy calls on AMC.
I mean, the problem is with this stuff is like the box office for movies is so reported already. Like you can just see how much money this movie made.
Yeah, that's
and
fair.
It's like very like, like I don't think the market, unless I don't know. I mean, unless they somehow it did impact the earnings that much. Also, I'm trying to figure out. So wait, this is for a Q. Can someone in the chat or someone tell me what exact dates this quarter is for?
I mean, you'd be for Q4.
It'd be for Q4, right? But I know, but some companies do it differently than just. It's probably from October 1st to the end of December, if I had to guess.
Yeah, it's definitely Q4, but I don't know the exact dates that it goes ahead and covers on that end. Will Bitcoin become the global currency in the future? I don't know. It depends also on how future we're talking, right? Like, are we talking 10 years, 20 years, 30 years, 50 years, 100 years? When I become a grandpa, I'm not quite sure. Let me take a look at something else here for us. All right, let's go ahead and take a look at what else we've got going on. So, Pan W. All right, you've got what's her name? Pelosi. That's in this stock, and you know who else is in this stock?
You?
I am.
The Pelosi and Zunaid. That's the power. That's Washington D.C.'s power couple right there.
Yeah, I'm not sure how as I said it, I didn't like the way it rolled out of my tongue, but yes, I own. You know what? Here, I'm actually going to share my portfolio, chat. Why not? I say portfolio like I've got millions of dollars, but who was in the stock first, me or Pelosi? Listen,
they don't need to know that.
Yeah. Mind your business. All right, mind your business. Here, I'm going to go ahead and take a screenshot, and I'll go ahead and share exactly what I've got and how much of it I've got. All right, I don't mind. I'm going to stop my screen here. I'm going to hit present. I'm going to go to window. We're going to do this. I'm going to share what I've got. All right, chat. What you're looking at here are my actual portfolio. Like, my let's mess around and have some fun type money. I say that so people don't think I'm broke. Okay. Let me know what you think. I'm in Blink because I think the chart looks really good. I'll go back and, show the chart, but I'm in Blink. I am in Pan W, as I mentioned. I've got 30 shares, right, at a price of 312. It's currently trading at 315. So what up 3 points? Then I've got a March 15, 315 call that I purchased, and I sold a 330 call. So I'm up about $100 on that spread. And then I've got some Coinbase weekly calls because I am a degenerate. And I was up $1,000 on that. I did not sell.
Why not?
Because I was busy on calls and I didn't realize I was up $1,000. So when I logged on, I was up $200 and I was like, yeah, whatever. And I think I'm down $40 now.
Yeah,
So
Coinbase leaking hard into the close here.
yeah, but like, why though? Like,
Probably because their thing went out today.
yeah, but we bounced back though, right? Like that happened at like 12:15 or so. So
Wait.
it should have
Oh,
bounced
so it
back.
went
It did
down and
bounce
then
back.
bounced back.
Yeah.
Okay, so it went up back up to 205, but it didn't go back up to where it was before that.
Yeah.
And
What's my
then
out on Blink? I think my out here, I'll put my chart up while Aaron talks. What's up?
I was just gonna say, you also, I mean, Bitcoin's doing the same thing. It's just kind of leaking right here. It's not doing much, right? Actually, Bitcoin's pretty much right at that $60,000 level. So this will be a
It
big,
is.
big level of psychological support to see if Bitcoin can hold this. And honestly, if you're looking at the chart, you zoom out a little bit.
Nope, let me.
No, I'm not sharing my screen or anything. I mean,
No, you're not.
if we can break through this previous high, 64,000, which it kind of tested earlier today, then the chart actually looks really good. This like nice rounding bottom pattern. I was just looking at the daily over the past like year and a half, 2 years, but it seems like we might be running into some resistance. And yeah, I mean, if we can't hold the 60,000, I'd be a little worried about a sharp pullback. Again, let me just go ahead and some levels here. I mean, actually, like, we'll see. 59,000. I mean, if 60,000 can't hold, 59,000, I think looks like the next level where you'll have some support.
Okay. Well, we'll see how that goes ahead and comes to fruition. But yeah, I'm going to, oh, look at this, by the way. Look at how beautifully. So these are levels I haven't touched, right? I think I drew this out when we had a breakout on like Valentine's Day, because on dates, if you're not talking about crypto, are you really attractive? Then when we kind of bounced up, I was like, hey, this is a level I'd want to buy at. Aaron, do you think I bought at these levels?
I'd hope so.
I did not buy at these levels, because, here's my challenge. Okay. And maybe the chat can agree with me as well. I have missed the boat on this whole Bitcoin situation. So to me, it's like, even if I buy like $5,000 worth or whatever, in order for me to double that, Bitcoin has to go to 100,000. I feel like I can turn that 5 into 10 in other places in life, or to 0. Don't get me wrong. I'm not saying I'm a god, but so yeah, that's why I don't really just go all in on it.
Shout out the Crow in the chat. Yes, I am working a full day, although I'm not a Gen Xer. I honestly don't know really what I am, but I know I'm not that.
Do you time doctor?
Do I time doctor?
Like, do you
Yeah.
track your stuff? How many hours have you worked today?
I don't know. I've been here since 7 in the morning, so however long that is.
That's insane. Okay, never mind. All right, let's go ahead and see what else we've got going on. So I'm in Pan W. Someone asked me about Blink because I was in Blink. My exit is $4. My exit is 4. My get out of this stock is 2. Oh, speaking of Blink, I mean, it has nothing to do with Bitcoin, but Mara does. Marathon Digital Holdings, they go ahead and report earnings after the close as well. And, we've been rocking and rolling with crypto. What are you expecting out of Mara? I mean, because I think if you want to get exposure to Bitcoin, I don't think Bitcoin is the play. I think you've got to take a look at Coinbase. I think you've got to look at other stocks that can double where Bitcoin itself may not double.
Yeah, exactly. I don't think Bitcoin's going from 60 to 120 anytime soon. It might, but you're like you said, Zunaid, 100% correct that Marathon has a bigger chance in the short term of going from 30 to 60. And it's just because you have that leverage. I mean, if you think about it, right, Bitcoin has Bitcoin. It's the asset. It's the commodity, whatever you want to call it.
Yeah.
The companies that are involved in it have all these different, moving parts, whether you're looking at earnings growth, or revenue, or like all these different things that can grow more, and you get that leveraged opportunity that you don't get by going just with Bitcoin. And it's the same thing. It's Bitcoin's not specific. It's not specific to Bitcoin. It's the same thing with, like, if you're super bullish gold, then maybe gold's not really what you want to play, because typically gold doesn't move that much. But if you find a gold miner or a gold, exchange, or a company that's like involved in the process of, I don't even know, like finishing the gold. What do you call that, Zunaid? Like turning gold from the raw product into the gold bar. If you can find a company like that and gold's doing really well, then probably those companies are going to end up having strong returns again in the short term and the long term. Who knows? But I agree with you today that if I was super bullish Bitcoin and crypto here, I would definitely be playing one of these names: Marathon Digital, Riot, Coinbase, and I would not be buying Bitcoin outright just because at 60,000 again, it's just probably not going to 120 overnight. I could be wrong. If Bitcoin opens up at 120 tomorrow, then I'll look real dumb. But hey,
Yeah, because we're definitely going to go ahead and clip it. But here's what I did do, though. I did go ahead and purchase some call options on AMC because I'm part of the movement. I mean, I already got out. Don't get me wrong. Like, years ago. Had a beautiful exit on it. But now I'm back in for this show, just for y'all in the chat. AMC, $4 calls. I purchased 2 of them. So I went ahead and donated $200 to the movement. And we'll see if we can get a nice little move to the upside. What do you think? Am I having steak tonight or am I having ramen tonight?
what do you buy? Some Maracalls? Maracalls?
Shit, did I buy the wrong ones?
What'd you buy?
Oh, no, that's March, you lunatic.
Wait, what are you? Oh, I'm looking at the TV screen, which is kind of far away from here when it's that small.
You scared me because I'm like, wait a minute. I'm looking at Mara.
Well, we were just talking about it, so I thought that's
yeah, no. But I was like, why isn't A missing? No, I purchased AMC options, $4 calls that expire this week. Chat, I just need to know.
How much were they?
They were like $1. So I spent like $200 on them. My average price is $1.07. Currently trading at $1.09, up $3. Stop playing with me, baby.
I want some
Stop
AMC
playing
calls.
with me.
This thing's probably gonna run to like what would you sell? I mean, if it opens up at like $8 tomorrow, are you selling it?
Oh yes, bro. If it opens up at like $5 tomorrow, I'm selling it. I don't care. So I'm doing this for the chat. That's all I'm doing it for. Appreciate 100 of you that are watching. By the way, smash the like button. But yeah, I'm doing this strictly for entertainment purposes.
All right, let me see if I can buy one.
Yes. But that means you got to hang out with me till past 4, and I know you got stuff to do. So you can come back afterwards.
Yeah, maybe. I will. I'll try.
By the way, chat, we've got a couple of dope things for you as well. This banner is incorrect. Why? Because they don't just have a 71% off sale. They've got an 80% off sale right now at Apex. I love funded accounts. I've got a whole bunch with them already. I've passed. Oh, we go doing full screen. I've got like 3 to 4 evals that I passed with Apex today. So I'm excited for those to be funded tomorrow once I go and, sign the contracts. But scan that QR code. It helps me out if you use a promo code Fever. So make me look good, please. I just got promoted like last week. So, help me out a little bit. All right. Take me off full screen now. They're not going to take me off full screen. Can you know what? I can control things too. Thank you.
Well, yeah. I mean, hey, look, someone had to do it. Your pitch was so nice. I had to let you go full screen so people could see.
You did it? Oh, that's messed up.
I don't know who did it.
Oh, okay.
All right, chat. Yeah, let us know what you guys were trading today. If you've been watching anything other than AMC. We do have some other companies reporting earnings today. Like Zunaid mentioned, you got Marathon, you got Salesforce, ticker CRM, I believe. Yes, CRM is reporting. Oh, wow. Salesforce chart. This thing has just been on a tear since it bottomed in late 2022, up more than 130%. Basically back at all-time highs. Looks like all-time highs were in November 2021 at around 307. We're right at $300 here. I'm calling a breakout in Salesforce. I think once it clears that previous all-time high, you're going to see Salesforce take off. You're starting to see, I think, people get a little bit. Wait, I was going to say, was I wrong about it being all-time highs? No, I'm never wrong. I was going to say, you're starting to see, I think, companies get a little bit more comfortable with spending money, which is good for Salesforce.
Oh, shit.
What'd you do?
Sorry. You've got like 2 minutes before I have to go to talk about what I'm about to do before the close. Go ahead.
Okay. No, I mean, that was basically it. I just was saying I like Salesforce here. I don't necessarily like it into this earnings report. Like it could, but if it pulls back here, then I might be looking at it for a buy.
We've got some numbers coming out tomorrow, right? And I'm curious if I should go ahead. Yo, why is my thing not working, bro? Come on. And I'm curious if I should go ahead. What is happening to my trading view? All right, that's weird. Whatever. And I'm wondering if I should go ahead and buy. My trade view is acting up. But I'm curious if I should go ahead and buy some puts on Apple or if I should buy some calls on Apple because of this beautiful trend line break. I think we've got what number is it?
PCE.
Yeah.
Yeah, PCE tomorrow. All right.
What are you thinking? Calls, puts? What are we rocking with here?
I mean, I would lean toward calls only because Apple's already drawn down the past few weeks. So if you wanted to buy puts, you should have done it when it was up at 194. Now that it's kind of beaten down, the calls a little bit cheaper. I might be able to find some ones and get that pop, but that's just me. That's how I would play it.
I'm looking at when does it come out? So the let's see. You've got I think it comes out at 8:30. When do the numbers come out?
Yeah, 8:30 a.m. Eastern.
Chat, what do you think? Am I getting calls or puts on Apple based on tomorrow's numbers? And by the way, if I'm getting puts, then should I be selling my call option on Coinbase? You know what I mean? Like, which way do I go here? I don't know. Let me know, chat. Let me know what I'm doing with my money as Coinbase is back above 200, baby. Nope, that's the wrong ticker. Got too excited. My finger slipped. Back above 200. Just get this back to 209 in like the next minute, and I can go and sell my Coinbase options. Puts. That's what we're doing. All right. I think I'm going off of Bumble laying off. Maybe the app will start working. Okay. First off, never mind. I forget we're live.
It's never worked for me.
Really?
Oh, you meant the app actually working.
Oh, I meant I've had some great conversations through the app.
Oh yeah. Well, that's good. It's good. It's good.
We need a show up. We need a Benzinga After Dark show.
Yeah, wait, tell me more about this sports betting show. I want to be a part of that.
Yeah, dude. So it's gonna be cool. We've got Jake, which Aaron Thomas didn't put the overlay. Come on, AT. Come on, AT. But no, we've got my boy Jake. Oh yeah, what a gangster! Look at that. The backdoor cover. My man Jake. It's gonna be at 6 p.m. You ain't gotta go nowhere. We go straight from this stream to that stream. We're gonna be talking NBA, NCAA, NFL draft, which by the way is in our backyard. So we'll be doing some dope stuff for that. And yeah, it'll be fun, man. I'm excited to the show name that I was going to go with, man, if I was doing this show was what was it? Dang, I even texted it to AT. Hold on, I have to see what the show name was.
Okay.
It was pretty cool too. But now I'm like, what was the show name I had? All right, now I remember what show name I had. This is stupid. But it was pretty good. Here it wasn't the show name. It was the YouTube title, which was "Want to Win Money Sports Betting? Come Fade My Picks." I think that's a great YouTube title.
Yeah. I mean, I might do that. Well, let's see how your pick. Are you going to be on it today, Zunaid? Can I see how you're
I'm going to be producing. Maybe I'll hop on with Jake. Oh, I forgot to buy puts, and now I'm stuck with the Coinbase call option. Okay, so this thing better moon tomorrow because while talking to you, you distracted me, and I forgot to buy my puts, and I forgot
to sell the calls
earlier.
So that's not my fault.
Anyway, chat. But yeah, we've got that coming up. Again, Apex down there. You see it. Scan it. We've got some other cool stuff going on as well. But now we go ahead and see how AMC. I know you got to hop here in a minute, but give me a prediction. Is AMC going to $6 first or $4 first? What's coming up?
I think that the earnings won't be great, but that the stock won't move down that much.
Just because it's like we're already kind of here?
Yeah, and there's probably a lot of people that are like still trying to short the stock and stuff when it's probably a little bit closer to where it should be trading at. I mean, the whole insane run in the first place, I mean, it was possible because you have, these types of market inefficiencies, and the market's always inefficient. And that's why there are trading opportunities. If the market was 100% efficient, then things would just trade at where they trade at, and that's what they're valued at, and that's that.
You sound much smarter than you are. This is crazy.
No, I don't know. I think I usually sound. No, I'm just kidding. But over time, even after while you do have these periods of inefficiency, over time the companies tend to start trading with what their actual valuation is, and that's what you saw happen with AMC. And so, I think right now, there's probably not that much alpha in playing the downside to AMC. I wouldn't hop in and short it. I'm not saying I would go out and buy it with my whole portfolio, but like if I were to have played this, oh, it looks like we are moving a little bit higher. Oh no, that's just your level. I thought it said we were at 510. That's why if I were to have played this, I would have bought calls to the upside like you did, Zune, because again, we've already had that move to the downside. No reason in trying to squeeze that last bit of juice that's still left in there when you can buy calls and try to get the upside.
Yeah, well, I am up here. Let me actually. All right, you can hop if you need to, buddy. I know you gotta go.
Well, I was gonna wait. When is it gonna come out?
405
probably.
Yeah. So here's my. I guess maybe I shouldn't be sharing my whole account, but whatever. So here's the deal, right?
All right, I'll hop back in a little bit, Suned.
All right, sounds good, buddy. So chat, I'm up $4 on my AMC calls. So this thing better open up at like 6 tomorrow, so I can go ahead and sell these for at least a 50% gain. By the way, Salesforce is out. All right, let's go ahead and take a look at a couple of reactions. You see my lovely face. You go ahead and see AMC. Now you're going to go ahead and see Salesforce. 1, 2, 3. Boom. There you go. Woo, to the downside. Salesforce Q4 numbers, adjusted EPS, 229, which beat the expectations of 226. The estimate on sales side was 929 billion, which beat 9.29 billion, which went ahead and beat the expectation of 9.22. But what do they not like? What is happening with Salesforce and why do they not like it? Obviously, with TradingView, you've got, it's actually here. So let me actually maybe do this. There we go. Let's see if we can find some levels on this puppy. That's the next level I'm keeping an eye on. Do we bounce from 276.70? Salesforce to the downside. Beat on adjusted EPS. Beat on their revenue, downside. I wonder if the guidance sucked or what. But we've got a movement to the downside on that one. And of course, we're gonna go multi-box here. We're gonna get crazy with it. We're gonna get funky with it. I'm gonna go ahead and move this out. We've got AMC, which we're still waiting on. We've got Bitcoin down here. Let's go ahead and have CRM, and then we're gonna go ahead and have AI. C3 AI, they're set to go ahead and report as well. And that's moving to the upside. I am surprised that ticker AI hasn't gone more parabolic to the upside where NVIDIA has and where all these other chip names have just continued to move to the upside, but AI itself hasn't. Look at that. Don't you love levels? I'm going to take credit for this bounce, by the way. I'm going to say it's because of my crayon drawing that we're having this type of move here. By the way, appreciate all 160 of you hanging out. Feel free to hit the like button, subscribe button. We like to trade all day from 8 o'clock all the way to like 11:30, and we got some cool shows and all that stuff. I know they aren't real. So Kevin makes a good point here. They aren't real AI. Sure. But we've had days where maybe a year or two removed where you had eyes that started making moves to the highs, right? And then you had ears, the ticker ears, that started making moves as well. So let's not pretend like we're sophisticated investors on the retail side. By the way, you've got a bit of movement on AMC, so I'm going to go ahead and kind of lock in on that one because that's what this stream is about. We're going to focus on AMC. Then we're going to go ahead and take care of the earnings call. Then we're going to go ahead and have a sports betting show as well. Let's see what we've got. All right, nothing really there. AI continues to move here. About $33 on that. Man, Coinbase really needs to do it. AI still, you know what? This is a funny comment. Let me see if I actually can. So right now I'm not, but now I am. See, I'm not looking at the camera. I'm actually looking here. And you can see my eyes do a little weird thing. Isn't that creepy? It is creepy. Imagine how the people that just joined the stream feel about me now. They're like, who is this weird guy? Look at that bounce, by the way, by Salesforce, right near our levels. We missed it by a couple of bucks. But what a beautiful level that was, where we got a nice little bounce of about $10 almost. Snow, Ooh, snow to the downside. Snow to the down. Ooh, look at that level. Look at that level. I don't even know when I put the level there, but the level works out. Can I just be nicknamed the level man? Is that a thing? Can I be the level man? What am I even doing with this? Anyway, downside movement. Do we get, I think, around 180 to 184 or 180 to 178 is where the next bounce is. But this is bad. Why is Snowflake going down? Let's go ahead and take a look. Snowflake Q4 EPS 35 cents beats the 18-cent estimate. Interesting. However, you also had 774 beat on the revenue side compared to the 759 expectation of revenue. And right now we are at that 180 level, excuse me, the 178.50 level. And are we going to bounce from there again? Am I going to go 2 for 2? Let me not pretend like I'm making money on this. I'm not. But, you know, we'll see what ends up happening there. AMC, I know, is what everyone's waiting on. No real action there on AMC. So we're just kind of going around the horn. By the way, if you're here, AMC is expected to report a loss of 70 cents per share and quarterly revenue of 1.05 billion. Shout out to Benzingo Pro for those estimates for all things finance, especially stock related. If you go and trade on that side, sorry, anytime I get a Slack or an email, I just like get scared, just squirrel. And the reason that we have AI moving to the upside is because they didn't suck as much as people thought they would. They went ahead and lost 13 cents per share instead of 28 cents per share. And their sales also beat estimates by about 2.2 million. And you can see that on your screen right there as well, which is why AI is moving to the upside. Let's see. For me, so here's the thing. On AI, we've been kind of in this little consolidation, if you want to call it, since like September, or excuse me, August, right? Where it's been, what is this? $34 to $23. Call it a $10, $11 consolidation. Is tomorrow the day that we finally break out? Is tomorrow the day that we finally move to the upside and break 35, knock on the door of 40, 45, 50? That's what it is, right? Let's see if we can go ahead and get that. I'm always going to come back to AMC because I know that's what us degenerates are waiting for. By the way, I did go ahead and buy 2 call options on AMC just for the fun of it. $4 calls, spent about $1.07 on it, and we'll see which way I end up losing money. Is it because the stock's going to go down or because the stock is just going to go sideways? We will have the earnings call in about 50 minutes at 5 o'clock. Then after that, we are going to go ahead and have our sports betting show, which is going to be called the Backdoor Cover. Jake is going to go ahead and host it. We're going to talk NFL, NBA, NCAA, the draft, and a lot more. But for now, let's go ahead and look through some stocks as well. Let's see if CRM has bounced back up. Nope, still hanging out there. Snow to the downside. It continues on that. Coinbase is one for me to take a look at tomorrow. I really need Coinbase to turn around because these call options are going to be painful. If I was up $1,000 and then I end up losing $750 because I was too busy hopping on calls. AI broke 35? No, it didn't. Oh, you are not wrong. You are not wrong. You know what? Who did I just call a liar? I apologize for calling you a liar. It was just at 33 when I looked at it, so I didn't really believe you. I'm sorry. Did you short it at 35.52? Which, by the way, we talked about levels, and it's not like I drew these after the fact. We drew these well beforehand, and it's not because I'm a genius. Anyone that's been in the market and trading for a little bit should be able to do it, where you've had support, resistance, and resistance one more time. So if you're trading tomorrow, this is the level that you need to watch. It's the 35.52. If we can go ahead and break that, that's when you get a chance to go ahead and buy some calls and take it to the upside, especially if the level 2 shows continuous buying and support at the bid itself. Mara, Marathon Digital Holdings. They've got earnings coming up here as well. Looks like you had a move to the downside 28, which was yesterday's support, looking to be today's support here as well. See if they get a chance to go ahead and move to the upside. Oh man, they never see. I wanted to go short the NQ here at this 17,980 area, but it never. I missed it. I missed my entries by about 10 points, which really sucks because for NQ, 10 points is nothing. You know, nothing's really happening there. Chat, let me know if there's any other tickers that you want me to review. And we can go ahead and go through them. Let me go ahead and take this down now. What tickers did you play? We actually had, so Benzinga went ahead and broke the news here. You see this beautiful pop. We broke the news at 8. The other news stations and everyone else, if you will, got it at like 8:30, which is where then you see a second pop. And this stock went all the way to 780 when it was at trading about $1. Check out Benzinga Pro. We give you access to news like this. We give it to everybody, but it's easier for you to digest it if you're a Benzinga Pro member. See, I'd be down. I'd be down to trade futures at like, 10 o'clock or whatever. But Benzinga's got to, I got to get that overtime pay. But more importantly, I don't know how much viewership we'd have. Right? I'm not 100% sure. Can I review team? I absolutely can review team. Let's go ahead and take a look. That's the 3-month. Who cares about a 3-month? That's crazy. So obviously the first thing I notice is this gap that you've got, right? You've got the gap from there to there. So if you go ahead and ever get to the point where you're entering this gap of 232 to fill it, I think you've got a beautiful chance to go ahead and have some movement. The second thing I notice is how we're having trouble getting above 210, but we're holding on to 200. So for me, if you're trying to go long this stock, it's quite simple. If it breaks 200, say 198, you get out. If it breaks 210, you're looking good. And we can make a move to maybe I would say about the 218.78, right? This is kind of like your next resistance area. If you break 210, then you can go to knock the door on 230s and then continue your way higher. But $200, it's a psychological number as well as the fact that it's holding on to support. I mean, look at that, 200, hold. So it's clearly holding on. That's what I've got on TEAM. All right, what else? DraftKings, DKNG. Stock that I want to own, I think is Robinhood. I think that's what I want to own. All right, first thing I notice, where's support? Pretty simple, easy to identify for me. You're looking at like $40, right? Why do I say that? Because you had resistance here. You had resistance here. Then you finally popped above. And then that resistance turned into support. Simple as that. Nothing too crazy. I got you here, Employee of the Month. Give me a minute. So yeah, $40 is where I've got my support area. If you want to go long here, wish you the best. If it gets to 39, 38, get out. Let's see if you can go and get your targets of 45 first, then 50 would be my second target. AMC is out. Thank you for that. Let's go ahead and jump to some AMC. This is why y'all are here. This is why you're here. All right, let me go ahead and head to my Pro and see what the AMC numbers look like. All right, AMC. Matter of fact, here I'll go through Benziga Pro with y'all. Ba-da-dum-bum-bum. Ba-da-dum-bum-bum. Oh, that's where the call is going to be, by the way, which we're going to go ahead and process for you here. Come on, where's the... All right, here we go. Total revenue, they grew 23%. I think the Taylor Swift concert had to do a bit of that. So you've got it right there where you had the adjusted EPS. They didn't suck as bad as we thought they would. They only lost 54 cents instead of 70 cents. And then you had revenue 1.110, which beat the estimates of 1.05. Looking at the fourth. By the way, the full year summary, they grew 23% compared to the 2022 numbers. If we're looking at just Q4, they grew 11.5. Adjusted EBITDA. So not overwhelming results to me. Nothing too crazy. Yeah, growth is great, but it's nothing really insane. And obviously the market kind of is bleh, whatever. Not a move to the upside for sure. The question is, do we get a move to the downside on AMC? I'm just reading some of these other things. Trying to look at their burn rate. You've got, thanks for this. Who just said it? MD. You've got Snowflake, where Frank, the CEO, decided to retire. And Mr. Ramaswamy, or I assume it's Mr. Ramaswamy, based on the first name, has been named CEO and member of the board. Mr. Ramaswamy previously held the position of Senior Vice President of AI at Snowflake. Let's see. Yeah, you knew that stock was going to take a plummet. So maybe that's what it is. They beat, right? They went ahead and beat the estimates on the EPS side. They went ahead and beat the sales on the revenue side. But when your boy is retiring, questions come up as to what is the real reason of retirement. Is something going on at the company? I don't know. But what I do like is the fact that they picked the Senior Vice President of AI. And with the AI craze that the world is seeing and the AI craze where we're headed towards in terms of technology in the future, I think that's a smart move. Mr. Ramaswamy, if you want to come on and have an interview with me, let me know. Would love to talk about the future of Snowflake. All right. Let's go back to AMC. Holding on to that support level of 477, which was today's low. Which, again, they didn't suck as bad. They actually made $500 million more than we thought they would. Someone wants to check out SOWN? You got it, Oliver. No problem. Your wish is my command. And I'll be honest, I don't know the best way to chart this one. It's not a ticker that I play often. I used to love playing Sono, is it? SONO? I think it's the speakers, but this one I really haven't. $5 is clear support to me, but obviously we're trading a little bit higher than that. So what are you going to do? I think if you go ahead and lose this $6, you got to wait and get out at 575 and maybe re-enter at $5. 6 is holding on as support. So you had it as resistance, turn into support once again. So $6 support, next level 5. And to the upside is pretty clear. It's 8. Breakout is 8. I kind of want to buy Snow here. I'm not going to lie to you. Because it's like, hey, the earnings call will hopefully be reassuring of Ramaswamy taking the helm as CEO. And the stock's already dropped. Like how much? Let's go ahead and calculate this, shall we? The stock has already dropped 25% on the news of the CEO leaving. So what do you think, chat? Should I buy some Snow here? Yo! Whoa! What just happened? Damn, there goes my $200. What happened here? Does anyone have news besides earnings? Which, by the way, we knew they didn't suck as bad as we thought they would. But why is AMC dipping here? What'd you do, Brad? What'd you do, Brad? What'd you do, Brad? I'm not gonna lie. I'm gonna buy some Snow. Let me go to my Snow. All right. I'm feeling degenerate. Right click, buy. Will AMC become an OTC stock in 2024? What a sad life. Speaking of which, where's Peloton at? Yeah, I cannot. Can you believe this is how Peloton trades after years of trading in the 160s, 170s? Like, come on. Are we never going to fill this gap? Are we never going to have an AMC type run to fill this gap? It's crazy. All right, AMC, come on. There you go. Bounce back. Sorry, y'all. Just got distracted with something. Let's see what else we've got. What else we've got? So Jay Rice is definitely not in AMC. That's for sure. Definitely not in AMC. All right, bro. I got to get into some Snow. Yeah, let me go ahead and focus on that. Trade Snow. Hold on, chat. All right. How many shares of Snow should I buy? So if it's currently trading at 177, I'm thinking worst case, this thing, maybe it goes to like 150, you know? So that's like $20, 20 points, 30 points. Damn, that's 30 points. All right. We'll buy 20 shares. We're good. Let's have some fun in life. All right. You know what? I'm feeling a little frisky. We're going 25 shares. Who just slacked me? Oh yeah, I got you, buddy. Let me go ahead and hey, Aaron, if you could. Oh, never mind. You already did it. By the way, chat, if you guys want, check out. We mentioned Snow. This is the benefits of having two producers. Make sure you guys check out David Prince at T3 Live. We actually have had them on a few times on our pre-market prep show as well. We're actually in conversation with them to get more content out. So check out their services, their platforms, their products. Scan the QR code there and see what they've got to offer to help you out with your trading. Let me see here for a second. What was I about to do? Oh, yeah, I'm about to purchase some 25. I want to go ahead and pay about 179 for it. Is okay. All right, I'm in. I'm in, chat. I'm in. I am in for 25 shares at $178.29 of Snow. And I don't lie to people. And by the way, for T3 Live, make sure you check out the link in the chat as well, or you can scan that QR code. They've got a free webinars and different cool things that they do. Actually, I think one of them may start here in a few minutes. So if you're interested in that, check it out. The link is in the chat. And what I'm going to show you is that I don't lie to you. I told you that I was going to go ahead. Oop, hello. I told you that I was going to go ahead and purchase them. I did. 25 shares, average price on Snow, 178.29. I'm up 25 bucks. I can take her to CC's and get some soda. Come on. Come on now. Make sure to check out David's free webinar today, again at 4:30. So it's happening in 2 minutes. Scan the QR code. The link is in the description as well. And of course, we just posted it in the chat. So go ahead and check them out. Oh, we flying. We up 60 bucks now on Snow. Man, if this thing gets back to 200, I will be so happy. And now I'm only up $7. This is terrible. Let's go and check out Snow. All right, we are. But you have Ramaswamy, who was named the CEO of Snowflake, where Frank is going to go and remain the chairman of the board. I have been asked to increase my... I don't know how to do it here. I'll do it on my trading view. I can do that. You can get rid of my face. There you go. Okay. Let's go ahead and check out if there's anything else happening. I'm going to go back to Mara here in a second, but I want to check out if CRM has bounced. Yeah, see, if Snowflake could do a bounce like this, where we go ahead and bounce, you know, a solid 3%, 8 points, 8 points on 25 shares. Come on, that's money. That is money. 30 minutes till we go ahead and get the AMC earnings call, where you had to move to the downside. 410 was your low. Then we went ahead and bounced back up to the 460s. But where do we go from here? Q's obviously finishing the day low. Never really filled me here on the short, though. That's just sad. That is just sad. All right, chat. I think I'm going to go ahead and bounce, but here's what's going to happen, though. We're going to... Aaron, are you writing your newsletter? Oh, he's not even paying attention. He doesn't have his headphones on. But I've got to go take care of some other stuff. So here's what we can do. I'll put the charts up, and y'all can hang out for 30 minutes because we will have the earnings call at 5 o'clock. That will be live. That's in 29 minutes. I'm going to go take like a piss, grab a snack, you know, but till then, let's see what we can... I'm going to put up a few charts for us is what I'm going to do. Let's go ahead and put up Snow and AMC. How about that? All right. Snow and AMC. So AMC, so if you can see if you're making or losing money, Snow, so you can see if I'm making or losing money. How's that? I'll be back, chat. Oh, producers, can we put a banner or something that says earnings call will start at 5 p.m.?
Greetings and welcome to the AMC Entertainment Holdings fourth quarter and full year 2023 earnings webcast. At this time, all participants are in a listen-only mode. A brief question-and-answer session will follow the formal presentation. If anyone should require operator assistance during the conference, please press star 0 on your telephone keypad. As a reminder, this conference is being recorded. It is now my pleasure to introduce your host, John Merriweather, Vice President, Capital Markets and Investor Relations. Thank you. You may begin.
Thank you, Diego. Good afternoon. I'd like to welcome everyone to AMC's fourth quarter and full year 2023 earnings webcast. With me this afternoon is Adam Aron, our Chairman and CEO, and Sean Goodman, our Chief Financial Officer. Before I turn the webcast over to Adam, let me remind everyone that some of the comments made by management during this webcast may contain forward-looking statements that are based on management's current expectations. Numerous risks, uncertainties, and other factors may cause actual results to differ materially from those that might be expressed today. Many of these risks and uncertainties are discussed in our most recent public filings, including our most recently filed 10-K and 10-Q. Several of the factors that will determine the company's future results are beyond the ability of the company to control or predict. In light of the uncertainties inherent in any forward-looking statements, listeners are cautioned against relying on these statements. The company undertakes no obligation to revise or update any forward-looking statements, whether as a result of new information or future events. On this webcast, we may reference non-GAAP financial measures such as adjusted EBITDA, constant currency, free cash flow, non-GAAP operating cash burn, and operating cash generated, among others. For a full reconciliation of our non-GAAP measures to GAAP results, please see our earnings release posted in the Investor Relations section of our website earlier this afternoon. After our prepared remarks, there will be a question-and-answer session. This afternoon's webcast is being recorded, and a replay will be available in the Investor Relations section of our website at amctheaters.com later today. With that, I'll turn the call over to Adam.
Thank you, John. Good afternoon, and thank you, everyone, for joining us today. 2023 marked another year of strong operational and financial gains for AMC Entertainment, affirming the success of our strategic recovery efforts as the industry continues to rebound from the lingering effects of the pandemic. Our determination, innovation, and agility allowed us to adapt to a rapidly changing and unpredictable box office in calendar year 2023. And once again, it allowed AMC to defy Wall Street's expectations, beating FactSet and Refinitiv consensus estimates in Q4 and for full year 2023 for revenue, adjusted EBITDA, adjusted net income, and adjusted earnings per share. As a result of our actions, global attendance at AMC theaters in 2023 tallied nearly 240 million guests, up 19% over the prior year, and marking the highest annual attendance in the post-pandemic era for AMC. When you couple our 2023 attendance growth with our all-time record-setting admissions revenue and our all-time record-setting food and beverage revenues per patron, AMC's annual revenues grew by 23%, exceeding $4.8 billion in 2023, and our adjusted EBITDA improved by $379 million to $426 million in 2023. It was the highest level for adjusted EBITDA in 4 years, the highest revenues for AMC in 4 years, and in fact, our adjusted EBITDA was up more than 9 times what it was just a year earlier in calendar year 2022. Unquestionably, our positive recovery trajectory continued in 2023. Not enough for where we hope to eventually wind up in the year ahead or the years ahead, but encouraging progress again was made. We're also proud that when you look at the magnitude of our revenue and adjusted EBITDA increases, AMC is outshining several of our largest and most important key competitors in the U.S. and in Europe. One of AMC's most essential accomplishments, which may not be widely understood, is just how efficient we have become after having to adapt to pandemic stresses these past 4 years. Thanks to AMC's increased high-margin food, beverage, and merchandise sales, rising ticket prices, our industry-leading premium large format capacity, a commitment to laser projection, pruning our network of some marginal theaters and replacing them with some clear winners, and of course, holding the line on costs, AMC's internal analysis reveals to us that our contribution per patron is up by some 37% versus what it was before the pandemic. This means that AMC does not need for the industry box office to return completely to pre-pandemic levels for AMC's adjusted EBITDA to dramatically outstrip what we generated historically. Speaking of the box office, let's turn to the domestic industry box office as a placeholder for the size of our industry and to demonstrate our industry's long climb back from COVID. We all know that the box office fell from $11.4 billion in 2019 to $2.2 billion in the height of the pandemic, calendar year 2020. But then the domestic industry box office started on its rebound, up to $4.5 billion in 2021, to $7.5 billion in 2022, and it grew again in 2023 by 21% to more than $9 billion in the year just completed. That is an upward slope for sure. Again, it's not enough, but again, progress has been made. And in looking at the fourth quarter of 2023 in particular, what is particularly noteworthy about the box office is how our company, AMC Entertainment, reshaped the box office and how much AMC benefited from our trailblazing industry-leading efforts with our highly successful distribution of 2 concert movies, Taylor Swift, The Eras Tour, and Renaissance, a film by Beyonce. In the fourth quarter, compared to the same quarter a year ago, AMC's revenue grew by 11.5%, and AMC's adjusted EBITDA almost tripled. Literally, all of that increase in AMC's revenue and all of that increase in AMC's adjusted EBITDA is attributable to our having shown these 2 concert movies in our theaters in the U.S. and internationally. They also caused AMC's U.S. market share to noticeably rise. That's because our share on these 2 concert films, the 2 that we not only exhibited but also were the distributor for, were well more than 50% higher than our market share normally. If that's not enough, both of these 2 movies played to rave critical acclaim. Each received a rare A+ cinema score, and the Rotten Tomatoes response was astronomical, with Taylor's film scoring a 99.98 and Beyonce's film scoring a 97.99. With some $213 million in domestic ticket sales within Q4, these 2 movies added greatly, not only to AMC's bottom line, but to movie theater success across our entire industry, as just these 2 films represented fully 1/9 of the complete fourth quarter domestic industry-wide box office, 1/9 from our 2 movies. Taylor's movie in particular was the single highest grossing movie of them all within the fourth quarter at the domestic box office. And worldwide, at $275 million of gross, Taylor's film also was the highest grossing concert film of all time and the highest grossing documentary of all time. It's hard to believe, but it's true. Only Universal and Warner significantly outgrossed AMC Theaters distribution domestically in the fourth quarter of 2023. With just these two movies, AMC Theaters distribution had a domestic box office gross during the months of October, November, and December of 23 that was only 1.6% less than that of industry behemoth Disney. And our two films domestically outgrossed all of what was offered theatrically in the quarter by Paramount, by Sony, by Lionsgate, or by any of the other smaller movie makers. This is a stunning result, given that neither of these films were on anyone's drawing board until mid-year, and that they were the first movies ever distributed by AMC in our entire 103-year history. What a triumph for our company. To that end, it is no surprise then that our praise for Taylor Swift and for Beyonce Knowles Carter has no limit. And you will surely understand why we offer our boundless thanks to these two world-class artists for entrusting AMC to collaborate with them as to the theatrical exhibition of their two masterpiece creations. I should add that I've said before that our phones have been ringing off the hook, and I can confirm to you today that we are now in constant touch with others who are seeking to have AMC also distribute the movies of more world-class musical artists for later in 2024 and or 2025. This blending of great musicians and movie theaters is an innovation for AMC that should and will continue into the future. But make no mistake about it, as pleased as we are with the movies that we distributed, or as pleased as we are with our entire results for the entire year of 2023, 2023 did not live up to its full potential. That's because the many months of actors and writers' strikes crippled Hollywood, and they seriously hurt movie theater operators who have been forced to wait for delayed movie titles that shifted out of 2023 into future time periods. After 3 years of hard work by one and all, after theaters were closed back in 2020, the domestic industry-wide box office finally was in sight of pre-pandemic levels back in the summer of 2023. At the peak of the summer of 23, the July 23 domestic box office was actually up 6% above July of 2019, the last July pre-pandemic. And in that summer quarter of 2023, AMC generated the highest third quarter adjusted EBITDA ever. Clearly, moviegoers flock to theaters when Hollywood releases films in quantity and in quality. Just think, Barbie and Oppenheimer. Or for that matter, think of what came out of Leawood, Kansas, Taylor Swift, the Eras Tour, among others. But the strike of 23 clearly interrupted that momentum that was pushing us to above pandemic norms in the middle of last year. The strikes in Hollywood led to the fourth quarter domestic industry-wide box office being down 35% versus pre-pandemic 2019. The January-February 2024 domestic industry-wide box office was down about 45% versus the same months of pre-pandemic 2020. We point this out not to alarm you or to whine about it, but instead because we want everyone to realize that by the middle of 23, we had finally emerged from the cloud of the pandemic. But then the strike hit and sent us back into the soup. However, At AMC, we believe that the strike impacts will only be short-term in nature. AMC believes that the box office will start to strengthen again as soon as this coming month of March, in some of the summer months of 2024, and especially in the latter third of this year. And over the medium term, we are both bullish and optimistic. With all the caveats that no one's crystal ball is perfect, at AMC, we currently believe that the industry box office in 2025 will be robust. We believe it will grow by $1 billion to $2 billion or more in size over what will be the box office in 2024. With that as an introduction to our results for the quarter and the year, I'll now pass the webcast over to Sean, our Chief Financial Officer, to provide more details on our quarterly and full-year financial results, and especially to share with you the progress that AMC has made in reducing our debt and in bolstering our cash reserves. After that, I'll return to provide you with my further take on where we are at the moment as a company and share some other news that may be of interest. Sean?
Thanks, Adam, and thank you to everyone for joining us this afternoon. I'd like to start my prepared remarks by briefly looking back over the last 4 years. No doubt our business has experienced challenges like never before. First, we had the COVID pandemic, then the Hollywood strikes, and all this while we managed through supply chain challenges and interest rate increases that have just put enormous pressure on our cash flows. Yet today, our business is remarkably well positioned to thrive as the box office recovers towards pre-pandemic levels. Over the last 4 years, we've improved our per-patron revenue and per-patron profit quite considerably. In 2023, our consolidated per-patron revenue was around 32% higher than in pre-pandemic 2019. This was driven primarily by growth in food and beverage spend per patron of 45.7%. And we've also increased our contribution dollars per patron. Contribution dollars here defined as total revenue less both film exhibition costs and food and beverage costs. And we lessened this by approximately 37%. So we've increased these contribution dollars per patron by approximately 37%. At the same time, we've worked hard to enhance our theater portfolio. We've been closing underperforming theaters and opportunistically opening higher-performing theater locations. As an illustration of the impact of the changes that we have made in our business, consider for a moment the following. In 2023, our domestic attendance was 32.3% less than in 2019. At the same time, we were able to keep revenue per screen flat with 2019 and increase our contribution dollars per screen by approximately 4.3%. So with 32% lower attendance, our contribution dollars per screen actually increased by 4.3%. The consolidated statistics I've quoted are in constant currency and help explain why we believe that A, the box office does not need to get all the way back to pre-pandemic levels for us to achieve pre-pandemic adjusted EBITDA. And B, at pre-pandemic box office levels, we should be able to achieve higher adjusted EBITDA than we were able to before the pandemic. And finally, looking back over the last 4 years, we have very actively worked to strengthen our balance sheet by reducing debt and increasing liquidity. It's worth noting that the total principal amount of our corporate borrowings and finance leases at December 31, 2023 was $4.56 billion. This is approximately $451 million lower than 4 years ago at December 31, 2019. And our net debt at December 31, 2023, net debt defined as total corporate borrowings and finance leases less available cash. This number was nearly $1.1 billion lower than 4 years ago at December 31, 2019, prior to the devastating impact of COVID on our industry. At the same time, it's also worth noting that given pressure from a rising interest rate environment and our heightened leverage ratios due to the box office being still well below pre-pandemic levels, our interest expense during 2023 was approximately $70 million higher than in 2019. Now to the results for 2023. AMC generated more than $4.8 billion in consolidated revenue for the year, marking a solid 23% increase compared to 2022. Likewise, adjusted EBITDA increased more than ninefold compared to 2022 to $426 million. And for the first time since 2019, we achieved positive adjusted EBITDA in all 4 quarters of the year. Now, looking specifically at the fourth quarter of 2023 compared to last year, the North American box office grew by nearly 5%, with Taylor Swift's The Eras Tour, distributed by AMC, leading the way. With market share gains, in part from the success of The Eras Tour, and very strong food and beverage per patron growth, our fourth quarter consolidated revenue increased by 11.5% to $1.1 billion. Domestic revenue in Q4 increased by 12.9% as a result of record-setting admissions revenue per patron of $12.83. This is 5% higher than a year ago, and record food and beverage revenue per patron of $8.31. This is an increase of 7.1% compared to 2022. It should also be noted that other revenue grew in total by approximately 32%, this driven by distribution fees associated with the concert movies, together with increases in retail popcorn sales and sales of movie-themed and AMC-branded merchandise. In our international business, competitive dynamics limited our ability to take price increases without adversely impacting market share. Attendance in the quarter increased by 3.9%, and on a constant currency basis, revenue increased by 2.5%, with admissions revenue per patron decreasing by 1.4% to $9.27, and food and beverage revenue per patron growing slightly to $4.38. Other revenue was in line with last year's fourth quarter. Now moving to cash flow and the balance sheet. We ended the quarter with cash and cash equivalents of $884.3 million. For the full year, non-GAAP operating cash generated, which is a measure representing cash flow from operations after deducting capital expenditures and before both debt servicing costs and deferred rent payback. This was a positive $68.3 million, a $362 million improvement compared to last year. For the fourth quarter, non-GAAP operating cash burn was less than $1 million. CapEx net of landlord contributions was $64.2 million in the fourth quarter, bringing the year-to-date net CapEx spend to $201.7 million, right at the midpoint of our 2023 net CapEx guidance. We expect that CapEx in 2024 to be in the range of $175 to $225 million. From a theater perspective, we continue to actively manage our footprint, and during the fourth quarter, we added 2 new high-performing theaters and closed 9 underperforming locations. This brings the total number of locations closed since the pandemic began to 165, and the total new locations opened to 59, for a net reduction of 106 locations, or 10.6% of the locations at December 31st, 2019. Going forward, as we continue to rationalize the theater portfolio, we will also continue to invest in our circus to enhance the guest experience. To ensure our ongoing recovery and ability to thrive as our industry grows, our top 2 capital allocation priorities must remain the same. 1, we must ensure that we have sufficient liquidity to manage through this recovery phase, including the impact of last year's Hollywood strikes. And two, we must strengthen our balance sheet by extending debt maturities and improving our financial leverage, thereby reducing our debt servicing costs. During the fourth quarter, we successfully raised $350 million of gross equity capital. We then repurchased $50 million of debt at an average discount of 20%. We exchanged $105 million of debt for roughly 14.2 million shares of common stock, and we repaid $17.9 million of deferred rent. The deferred rent balance at the end of 2023 was $56.3 million, and we plan to reduce this balance by another approximately $20 million by the end of 2024. Overall, since the beginning of 2023, we have raised $865 million of gross equity capital. We've lowered the principal value of our debt and finance leases by $466 million. We did this through debt repurchases or exchanges of debt for equity, and we have repaid $101 million of deferred rent. This all for a total reduction of debt and deferred rent of $567 million. The debt reduction since the beginning of 2023 has lowered our future annual cash interest expense by approximately $44 million. All told, as of today, we have reduced our debt and deferred rent liabilities by approximately $958 million since the beginning of 2022, so over the last 2 years. Having the flexibility to raise equity capital has been critical to our survival, and it has allowed us to seize opportunities to strengthen our balance sheet and build a foundation from which to thrive as the film exhibition industry recovers. Capital markets actions that we took during 2023 have positioned us to face with confidence the probability of a relatively weak near-term box office, especially during the first half of 2024. While the box office for the first half of the year will likely underperform last year, we are increasingly optimistic about the outlook for the latter half of 2024, and the film slate for 2025 looks incredibly exciting. And now I'll hand the webcast back over to Adam.
Thank you, Sean. As I said earlier, and as our financial results prove, 2023 was clearly another year of recovery and improved performance for AMC. But it was not a good year for our shareholders. Adjusted for stock splits, the AMC share price has fallen to a fraction of where it was as recently as last summer. And I promised our shareholders that I would use this earnings webcast as a forum to provide them with some straight talk, to give them my take. So here's my take. There is so much garbage information floating around Twitter, YouTube, and other corners of the internet about AMC. Conspiracy theories abound, facts are distorted, bad motives are assumed when the exact opposite is true. So I want to address some of these issues so you get the straight scoop. I can't address all of those issues in the limited amount of time that we have, but I do want to address some of the most important. First, as to all the hubbub and litigation that surrounded AMC and the Delaware courts in 2023, I want to remind you that our shareholders got the right to vote on our proposed actions. And not only did the preferred shareholders vote in favor of what we did last year, but also of the common shareholders who voted, their count also was in the affirmative by a wide 72 to 28 margin. Then the Delaware courts ruled that the company could settle the litigation surrounding those shareholder votes and proceed to implement exactly as our shareholders voted. Second, as to dilution, back in the summer of 2021, it's a long time ago, after it was clear that shareholder sentiment was not wholly supportive of more equity sales, we said there would be no more in 2021, and we kept our word. Some critics, assigning us bad motives, were convinced that we would start more equity sales in the very first week of 2022, since the commitment we made only incorporated 2021. But they were wrong. We sat on the sidelines for almost 8 months in 2022. But by August of 2022, we did in fact introduce into the market AMC preferred equity units because, among other reasons, we wish to make it possible for AMC to raise more cash through the sale of shares if we thought it was advisable or if we needed to do so. We were very clear about this in our public disclosures at the time. Between August of 2022 and June 30 of 2023, AMC raised $418 million by selling what were called APEs. AMC's cash position at that end of June 2023 was $435 million. $418 million raised, $435 million of cash. Do the math. Had we not sold those shares, deduct $418 million from $435 million. Big companies, the size and scope of AMC Entertainment, cannot survive with only $17 million of cash on hand. Similarly, in the full year of calendar year 2023, AMC raised $865 million of cash through the sale of APEs and the sale of common stock. We ended the year with $884 million of cash. $865 million raised, $884 million of year-ending cash. Again, do the math. Had we not sold that equity, deduct $865 million from $884 million. Big companies, the size and scope of AMC, cannot survive with only $19 million of cash on hand. We did, in dilution, what was absolutely vital for your company to do to get through the many challenges that have been thrown our way. The absolute smartest way for AMC first to survive and then eventually to be in a position to thrive is to have robust cash reserves. Period. Plain and simple. There can be no argument. Cash is king. Third, from time to time, there have been matters related to the trading of AMC stock that have been of concern to some of our shareholders. As but 3 examples, the absolute number of failed to deliver shares, synthetic shares, or the length of time AMC Entertainment was on the threshold list, among others. We dutifully have kept the New York Stock Exchange and appropriate regulatory bodies well informed, and we make frequent public filings. But here is a key reminder and clarification. AMC is a company that is listed on the New York Stock Exchange, but we are not the stock exchange itself. Frankly, we have no ability to regulate or enforce trading practices on the stock exchange. And as much as some of you may wish it to be otherwise, our business is the exhibiting of movies in theaters. We are not in the business of reforming the financial markets overall. Then, as to our motives, it's disappointing how many people out there type into their Twitter feeds that the management team at AMC is somehow actively working against the interests of our retail shareholders and instead is nefariously on the side of evil, the so-called hedgies. A company that does not post the kind of improving financial results as AMC just did today if one is out to sabotage one's owners. one does not sell $54 million of movie-themed merchandise in our theaters and online, as AMC did in 2023, versus virtually no sales of such items only a few years ago, if their motives are impure. And I should point out, by the way, that selling merchandise was an idea that came in from our retail shareholders, by the way. Similarly, one doesn't launch popcorn to the home or blaze new trails with innovative concert movies that have been incredibly profitable and reputationally enhancing for AMC if one is trying to undermine our company's success. So given all that, then why has our share price been falling? Are those conspiracy theories right? There are many, many complicated factors that affect any share price. Some well understood, some not so well understood. But my own view is pretty basic and overarching. It is this. It has taken way too long for the entire movie theater industry, including AMC, to recover in attendance or to recover financially from the impact of COVID. Also bad, just as adjusted EBITDA in the summer of 2023 was returning to more acceptable pre-COVID levels, no one needed for the movie industry to be paralyzed by debilitating strikes, which will temporarily challenge AMC earnings in 2024. We believe there are numerous other reasons too, like rising interest rates and inflationary wage and cost pressures, among many others. But in my mind, the key issues are, first, the long drawn-out recovery, and then the strikes of 2023, combined with the steps we've been forced to take to wade through 4+ years of a depressed box office. These are the issues that have pressured AMC share price. So let's cut to the chase. Looking ahead, is there hope? As I stated earlier, the box office should start to strengthen beginning as soon as March, a month that starts a mere 2 days from now. It should further pick up later in 2024, and the box office for 2025 could be very favorable, as movies that might have been released sooner finally get released in 2025. So yes, in my view, there's good reason to be optimistic. That optimism notwithstanding, AMC must continue to address our debt load, extend our debt maturities, currently mostly in 2026, and push them out into later years, and also to ensure that our cash reserves remain robust. That is the recipe for success. Remember what I said earlier on this call. Cash is king. At AMC, our strategy is sound. Run the best company we can. Please our guests at theaters and serve them well. Prudently innovate. Drive the most earnings we can. Reduce debt, extend debt maturities, and have the cash reserves on hand to outlast the tough times. Doing all that, which is what AMC has been doing so well over these past several years, is what makes me optimistic and confident about the future. Because as the clear leader of the movie theater industry and the clear leader by a wide margin, AMC is doing all the right things. There's one more topic that I want to raise before we turn to your questions. And that is our interests, meaning the interests of our shareholders and my interests as CEO of the company and as a shareholder myself are perfectly aligned. I personally am AMC's largest retail shareholder. So, as your shares rise in value, so do mine rise. As your shares fall in value, so do mine fall. In the last 6 months, as the AMC share price has dropped, I personally have lost tens of millions of dollars in the value of my AMC shareholdings and in my granted but unvested stock. I assure you that focuses the mind. In my stock losses, I share in your frustration, I feel your pain, and I'm heavily incentivized to get the value of your AMC shares back on the right track. In the past 2+ years, I have been a holder of AMC stock, not a seller. Indeed, I have not sold a single AMC share since January of 2022. While I have forfeited granted shares on the same day as they vest to pay the federal and state income tax withholdings that are immediately due upon that vesting, I have not sold even one share in the marketplace, not one share in the last 25 months. I wrote often on Twitter that I ride with you. I am a shareholder. I am holding. I'm not selling. I ride with you. So when you get well financially with AMC, I will too. But if you're hurting from that investment, I believe that I too should be hurting with you as well. Therefore, to prove that these words are not hollow and to show executive leadership from someone who is in your foxhole, I want you to know that I recommended last week to the AMC Board of Directors that for the next 12 months, starting right now, my target compensation should be substantially reduced. While my actual compensation can be at the target, below the target, or above the target based on the company's financial results, the board and I agreed that my target compensation will go down right now as we move forward by 25% versus the previous year's target. And maybe even more of relevance, if you compare my new lowered target compensation against my actual compensation for the past year, as most recently publicly reported, that's actually a 50% reduction in my potential compensation in the year ahead. There's no anguish in my voice about that. That is what a CEO of a company like yours should do, because I mean it when I say that I ride with you. You now know what I think. 2023 was a year of superb achievement and innovation at AMC. And fortunately, AMC starts out 24 with $884 million of cash. Cash is king. I've said it multiple times, and that is the guiding philosophy that has caused this company to stay in a leadership posture no matter what the world threw at us starting at 2020 and since. While the box office took a 5-month downturn starting in October of 2023 because of the long strikes in Hollywood, things will pick up considerably soon, and then again later in 2024. And 2025, which in the grand scheme of things is right around the corner, could be a gangbusters year, both for our industry and for AMC as a company. We are in this together, you and I, and here's hoping that we all are smiling as we head in the next year. With that, Sean, let's move to questions from analysts and from our shareholders.
Thank you. Ladies and gentlemen, at this time, we'll conduct our question and answer session. If you would like to ask a question, please press *1 on your telephone keypad. A confirmation tone will indicate that your line is in the question queue. You may press *2 if you would like to remove your question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. One moment while we pull for questions. And our first question comes from Eric Wold with B. Riley Securities. Please state your question.
Hey, good afternoon. Thanks for taking my call. Adam, I guess I want to go back to kind of one of the parts of the business that's, I think probably not as talked about, but the distribution business. I think, one of the knocks on the overall exhibition business in general for years has been that, the availability of content, was largely out of control. So when you get things like, the pandemic or strike, there's little that you can do to kind of drive content into your theaters. Obviously, this changes somewhat with what you did with Taylor Swift and Beyonce. I guess as you continue to build out that business, I know you talked about you're in discussion with other artists for releases later this year or the next year. I guess any sense of what you think the annual opportunity could be for revenue and EBITDA from that distribution business, and then what do you think is the ability of AMC to kind of move outside of the concert or kind of musical film genre into other genres that may be, more direct competition with some of the other larger distributors out there?
Well, Eric, look, you're entirely right that if you look at the single biggest challenge that our industry has faced since the reopening of theaters at the end of 2020, it's in the lack of content. And we took matters into our own hands in 2023 with Taylor and Beyonce and had two grand successes. That causes us to want to do more. We certainly got the attention of the best musical artists in the world. And so there will be more of those. I don't want to quantify it. I mean, I've got a good sense of it, but I don't want to quantify it quite yet. Let's land some contracts for future concert films, and then we'll have a better sense of what you can count on reliably. But who knows where this will lead? There's other alternate content that we could focus on other than just concert movies. We could look to comedy, we could look to sports. When you think about the movie theater industry, it's a dirty little secret that the industry only sells about 15% of our tickets. I used to work in the airline industry. We sold like 75% of our tickets, not 15. There has to be ways to create alternate content that will not replace what Hollywood's doing, but will augment what Hollywood is doing by filling some of those empty seats that are just sitting there waiting to be filled. It also does sort of cause us to think, what other ways can we generate movie content in our theaters inexpensively? I don't think you'll ever find a situation, where AMC is writing a check for $50 million or $100 million or $200 million to make movies. But there are some interesting ways to collaborate with movie makers to take movies that might not otherwise get made and get them into our theaters and into some other theaters of our friends in the industry, both in the U.S. and abroad. So this whole notion of how do we increase content is something that's completely in our wheelhouse, and it's a direct result of our success in what we've tried to do in the fourth quarter and succeeded with Taylor and with Beyonce.
Thanks, Adam. Appreciate that.
Thank you. I'll now hand the floor back over to. I'll now hand the floor back over to Adam Aaron to take some retail shareholder questions. Thank you.
We'll take it, Diego. We have had retail shareholders send questions in. Sean, what do they want to hear about?
Yeah, sure, Adam. So the first question is generally about the industry recovery, which we've certainly been talking about a lot today. But the question relates to, with players like Amazon and Apple entering this business, is it likely that we can see the release schedule really increasing past pre-pandemic levels in the future?
Well, that's a good question. But before we talk about whether we get beyond pre-pandemic levels, let's talk first about getting to pre-pandemic levels. Because as we sit here today, the movies released by the major studios are down about 25% from the quantity of pre-pandemic releases. The good news here is, as you know well, we talk to every major studio every week of our lives here at this company, and we know that studio after studio after studio sees the opportunity for them that can come from achieving high theatrical grosses. And one studio after another is doing all of its power to increase their release schedules, to get the release schedules first back up to pre-strike levels, and then hopefully even higher levels than that, moving back closer to pre-pandemic levels. Yes, it's true. Apple and Amazon are making movies. They're releasing those movies theatrically. We're working very closely with each company. Happily so. We welcome them to the party. We have enough screens in our company and in our industry to accommodate whatever supply of content all these studios can produce, and then some. I would point out that one of the comments in my prepared remarks, it's so important, is we've done so much in the past 4 years to make this company more efficient. Our profit per patron is up 37% from where it was when we entered the pandemic, which means we don't actually need the box office to come all the way back to pre-pandemic levels. We don't need attendance to come all the way back to pre-pandemic levels because we're making so much more profit from each guest who is in our theater. As for whether, in fact, and when the box office does cross that pre-pandemic hurdle and crosses $11 billion, we'll all find out together.
Great. There's related to that, there's some questions about diversification and what revenue diversification opportunities exist to grow and enhance our business.
So I don't think anyone's worked harder at diversifying their revenue streams in our industry than AMC has in the past few years. And some of them have been quite high profile. Things like giving Orville Redenbacher some competition on the shelves at Walmart with our popcorn lines that we took to the home, which is selling extremely well at Walmart. And we just literally in these very months are in the process of having extended our retail presence to Kroger and to Publix. We also went up on the Amazon marketplace. So that's an example of diversifying our revenues. We launched our candy line. I guess it was in December, I think, at our theaters. I've tweeted publicly about maybe coming up with a house wine or house beer. Beyond that, though, I think the single biggest, most successful diversification play we've had so far is what we've done with movie-themed merchandise. As I said in the prepared remarks, we sold $54 million of it in 2023. Like 3 years earlier, we sold nothing. $54 million from nothing. We continue to be intrigued by diversification, and there are other diversification opportunities, but I think it's really important to say this. We work very hard to bring all that cash into our bank accounts, as you know. And 2024 could be a challenging year, especially early in the year. We need to husband all of that cash and treat that cash as being very precious because it's the thing which assures our survival going forward. Therefore, if we're going to look for diversification plays, we have to do so in a capital light way. We have to be able to diversify, spending very little money to do so, because the smartest thing we can do with our cash right now is keep it for a rainy day.
Questions here on loyalty programs. There's quite a few questions on the loyalty programs. And people are asking if there's an update to the loyalty programs coming, any ideas such as bringing a friend along for A-list members in exchange for a fee perhaps, or a family plan for A-list, or other new creations for our loyalty programs?
There are a lot of ideas about our loyalty programs. Our marketing department right now is in the process of testing some things we've given a lot of thought to. A-List is of great appeal to us. Of course, it's been a very successful program for our company. The most important marketing program this company has ever had is our Stubs frequent moviegoer program. And there are a lot of interesting things that we might be able to do to make Stubs appeal to more people and to cause people who are Stubs members to attend more movies. There are interesting things afoot about how might one qualify for Premiere, as an example. There are other possibilities we have 3 tiers in the Stubs program right now: the free insider tier, the paid Premiere tier, and the A-List tier. There's talk of creating a 4th tier of Stubs, somewhat in between the Premiere level and the insider level, with new benefits. We're going to test right now, research and test right now for possible rollout later this year. And then there's a program near and dear to my heart, which is a loyalty program of another sort. It's called AMC Investor Connect. We have over 1 million members of AMC Investor Connect. These are our shareholders who've registered with us and told us that they're interested in our company. They're either current or former shareholders. We've been in frequent communication with them. We've had lots of advanced screenings for them. We've given them some free this and that, some free popcorns and some free drinks and other things. One of the things that we will definitely be doing in 2024 is reinvigorating AMC Investor Connect, adding more benefits to it, because we know how loyal and those AMC Investor Connect members are to AMC. We want to thank them for their loyalty and encourage them to visit our theaters over and over again. Those are just some of the things we're working on, but watch this space. You know, I might add that, you know, I think one of AMC's greatest strengths over the past decade has been, I think we've been the preeminent consumer marketer in our industry. Just think about the Nicole Kidman campaign, for example, that took on like a cult-like nature. It really hit into the American zeitgeist. And one of the things that I think is fun about that is if you go to an AMC movie, there's something called the pre-show. It's the thing that comes up just before the trailers run and before the movies run. And for the first time in 4 years, starting in a couple of days, we're putting up a new pre-show on the screen. We think it's kind of beautiful and spectacular. We think people will like it. But one of the intriguing little twists is we're moving into phase 2 of the Nicole Kidman campaign. For the last 3 years, we've got a 60-second Nicole commercial, the same one that's appeared over and over before every movie start. And starting March 1, we're going to show 3 different 30-second Nicole Kidman commercials before the movie starts on a rotating basis. You won't get like 3 in a row when you go watch one movie, but as you watch movies going forward, you'll see 3 different Nicole spots that kind of randomly will appear in our theaters prior to the show. We're very good marketers. We use that for the benefit of driving revenues, and as you saw, our revenue growth in calendar 23 and in the fourth quarter of 23, we outpaced just about everybody in our industry.
Something new and exciting for people to see when they come to our movie theaters. I think we've got time just for one more question, which is related to capital expenditure. And the question is, what is sort of the ongoing CapEx level that we would expect over the next 3 to 5 years? The questioner here notes that pre-pandemic we were spending around $500 million per year on capital expenditure. What should investors expect going forward?
So for the past couple of years, we've been in a landscape of 150 to $200 million of annual capital expenditures. About 150 of that is to what we call maintenance capex, to just keep our theaters in good shape. You can't run a movie theater with a leaky roof, or an air conditioning unit doesn't work, or a projector that doesn't show movies. And then some of that capex has been used for enhancing our IT systems and growth-oriented projects, bring some spot acquisitions. You said we added 59 theaters into our system over the past several years. Some of our capex goes to bring those new theaters into our system. As you look ahead, those years of $500 million capex, those were in the days when we were, renovating, putting in reclining seats and 50, 60, 70 theaters a year. That spurt is way behind us. So I'd say that with one caveat, people should be expecting capex in the $200 million range going forward. And that caveat is this. Because of the tough years that we've had with respect to earnings over the last few years, we've put a tight lid on capital expenditures. It was crucial for us to keep cash in the bank and not necessarily spend it all. There are some obvious growth projects that if we were to raise an additional $50 to $100 million, for example, and we wanted to reinvest that back into our fleet of theaters, if that was something that would produce the highest and best return on that investment, it would have to produce a return on investment higher, for example, than buying back our debt at a substantial discount, which we've done a lot of in the past year or two. There's just some obvious things that are low-hanging fruit where we know the payback would be quick. And the most obvious of them is this. AMC has the largest number of premium large format screens of any movie theater chain in the world, and it's not close. We are 50% of all IMAX screens in the United States, for example. We're 100% of all the Dolby Cinema screens in the United States, for example. And what we've seen is that our premium large format screens command a price in the market that's about 30% higher than the normal so-called 2D auditorium price. They sell out first. The typical seat in a premium large format screen is sold 3 to 4 times more than the typical seat in an auditorium that's not a premium large format screen. And I could easily see us, we have about 600 or so premium large format screens around the world. I could easily see us adding another 150. And we would get a great return from that, but it's not a cheap endeavor. And we'd have to be very careful about how much money we invest and doing it at the right time. So I don't want to say that there's a lid on CapEx spending of $200 million because there are some low-hanging fruit, no-brainer ideas on how we could further drive profitability if we do have additional CapEx dollars to spend. Right. So I'm looking at the clock. We're past our hour, so we're going to bring this webcast to an end. I'd like to leave you with the final simple thought. 2023 was a superb year for this company on the march to getting back to pre-COVID levels of profitability. 2024 is going to be a bit harder, but 2024 is going to get a lot better starting tomorrow because Dune opens in all of its glory, and we're expecting it to be a big and successful movie. We hope you all buy tickets, go to the theater, be amused, be entertained. And as we look further beyond just this weekend, and we look ahead to the next year, which is, as I said, right around the corner, we really think 25 is going to be an incredible year for our company, and should be the just as 2023 was the best year since COVID, we're thinking 2025 is going to leave 2023 in the dust in terms of how potentially good a year 2025 is going to be. So we're optimistic, we're confident, and we'll see you all at the movies. Thank you for joining us today.
Thank you. This concludes today's conference. All parties may disconnect. Have a good day.
All right, what's up, chat? Appreciate y'all for tuning in for the AMC earnings call, earnings report. Hope you enjoyed the conversation through the charts. I mean, you also had Snow that went ahead and jumped on the earnings call just like we thought. So hopefully y'all made some money on that end. Let's see where crypto ends. But for now, it's time to talk about some sports betting. So don't go anywhere. We're going to end the stream. You'll be redirected to the backdoor cover hosted by my man Jake. We'll talk some NCAA. We'll talk some NBA, some NFL draft, and a lot more. Don't go anywhere. You'll be redirected.